Hey guys, Steve here with a quick educational video taking you through a trade I had made in NFLX back in 2012. So what I had done is I had identified on the weekly chart that we possibly could be coming to a bottom. So as you can see, NFLX back in 2011 was coming lower, and then in 2012 it had started actually moving sideways and putting in what I would call a basing pattern. So basically the whole year from 2012 on, it was moving sideways. So I was waiting at this point for a breakout above this 130 level in NFLX, which we finally got on earnings. So that was the trigger that it was time to start looking for long trades in NFLX. So then what I did at that point was I started looking at the daily chart. And there was the same earnings breakout that we had. Now I could say I got long on that, but that wasn't the case. Basically, with this pattern, I wanted to make sure it was actually going and it wasn't just a false breakout. So I stayed and I waited in NFLX for, I guess, probably about 4 or 5 months. And you can see now on the daily chart, it's actually moving sideways again. And here was the consolidation that we identified now on the daily chart. So we took that earnings gap, and there was the consolidation we had in NFLX on the daily chart, which is also, I don't want to go too far. Okay. So then we finally, the next time earnings came around, so 3 months later. So I had this on my watch list for 3 months. When it finally came around the next time, gapped higher, I said, all right, well, now I know that we're moving higher, and that's the signal we want to be in. So at this point now, I got long at 216. So we'll put a little dash there. So I was long now at 216. My initial stop was down here at 162. 216. So I had about, I'd say a $30, no more than that, $50 stop. And this was more for an investment than an actual trade, so that's why the stop is a little bit wider than normal. But I mean, we could have easily put our stop up here at the 197 level. So if it went back into consolidation, then we would exit. But here was where we got long. Make that green. So now we're in the trade. Okay, and now what happens is we get another brief consolidation period. So that was another trigger that I was able to actually take and move stops to 205. So what happened was we consolidated on the daily chart for about 2 weeks, finally broke out again. So I was able to say, okay, this is a significant low, and that the stock should not retest those below those lows. And there's the trend line. So now we're still long. Could add to the position if you felt like it, or leave it where it is. Stop is 205, and this 162 level now goes away. So our initial stop was 162, and our current trailing stop is 205. So as you can see, it was somewhat tested, never broke. Stop is still 205. And now finally we got another push higher. So basically the only time I ever will trail a stop higher is until we get a new high. So a new high means a new trailing stop. So right here, 243. So I was able to actually move the stop to this level here, this 211. So not much, but it did move higher. And again, we have no price target. We don't know where this is going. This is just all based on price action. You could say this is another small consolidation area in here. Therefore, we move the stop up. And now we're going. Stock's going, pulls back. So now we made a new high. Stop trails. So now I won't be able to trail my stop any higher until this high, this 267, is exceeded. So we let it go. Okay, and now there's the next level, and the trailing stop now is able to move to 241. And this stop goes away. So as you can see, new highs, new trailing stop. Okay? So now it's going again. Stop still stays where it is. Really nothing going. And here, what happened was we got another consolidation. Oops, that's not what I wanted to do. So with that consolidation, hold on one second. We were able to actually redefine our so that's the new trend line, which we would have been able to draw back then. It's kind of hard now when you're going through it. So now the new stop level becomes 299. So now from, basically we moved our stop 4 times. This stop now becomes grayed out. That stop's gone. Our new stop now is 298. So we're going, and then right there is where we're stopped out. This box right here. So we had a break below the consolidation and below our trend line. Now, depending on how lenient you are, I think I did get stopped out there. But then what happened was a new box formed. We broke out higher and we took on a new trade. So if we said, okay, well, that stop, maybe depending on how we drew our trend line. I mean, this was going back a little while, so I'm just going by memory, but I know this was definitely a trade because I have it in my book. So maybe, we didn't fully get stopped out because we came right into trend line support. Who knows? The fact is, we really didn't get much going afterwards because we had this big, huge bearish engulfing pattern. It's still trending higher. Still trending higher. And then there we finally got the breakdown. So stop would have went from for a new trade, it would have either went from here, this 288 level, to potentially the 313 level, to potentially 326, and then 333, and then 355. Because what happened was, as the stock was moving higher, it was making all these small little consolidation boxes. And the longer the consolidation is, the more confident I am in it. But as you can see, it's making these boxes and getting new breakouts. So that's really how we are going to move forward with the Turtle Follower, with the blog. And these are how I take my trades every single day, day in and day out. Of course, it's harder to go back and look at it and try and remember where we got in and where we got out. But if we follow a system, you should be able to do that on almost every trade you take. to determine where you would and would not have gotten out. So essentially, this trade took us from the 215 level to we would have got out at the open of the following day. From there to there. So it was 261 days, and we made 56.7%, $121.96, approximately. So, I mean, that's not a bad trade, especially that you didn't know where it was going and where it would end up. So, like I said, that's kind of how I go through and I take a trade from start to finish. We're doing that with the free trade idea. We're also doing it in the strategy sessions every night. So if you're not a subscriber, please do so. You can go right to the blog and subscribe to the free trade idea and become a member if you're interested to get more than one idea, a night. And basically, this is how we are going to take our trades. So all we're doing is we're letting the stock tell us when we're wrong. Now, obviously, depending on how we got stopped out, we could have been stopped out here, could have been stopped out here. Eventually, the stock went on to 456. But the idea of trend following is that you're not going to get in at the bottom, and you're not going to get in at the top. Sure, I could say, hey, you know what? I got in at 101 and I got out at 437. I'd love to say that. That's not the truth, though. Truth is, this is where my system identified it as a trade, and this is where my system identified it as a non-trade. Either way, 56.7% is a pretty good trade. One other one that I'm in actually currently, which may be a little easier to go through, and these are actually my stops that I have in right now, is Alcoa. So Alcoa triggered for me right here at this 1238 level. My first stop was 1105, 1173, 1238, 1314, 1403, and now this little yellow arrow is my next stop level, because these are all consolidation levels that have been exceeded. So we had one here, and this is in all honesty, this is an ideal situation. Here's another longer one. Here's another one. Here's another one. So those are all levels that continue to be exceeded. Now, my stop, even though the stock is 1633, my stop is still 1471. So I can give back, $1.50, before I'm proven wrong. But I've been in the trade from March to today is July 17th. So, I've been in the trade for 4 or 5 months. And, right now I'm up about 30% in the trade. I have no idea where it's going, but it was based off of this weekly consolidation breakout. And then finally we had a daily consolidation that I was able to enter in. So, like I said, those are how I trade. That's how I trade. That's how I'm going to be trading for the Turtle Follower. And I hope you guys join me, and learn how to do a little trend following and how to become a more consistent trader. So please visit me at theturtlefollower.com. Also, subscribe on the blog for the free trade idea. Follow me on StockQuits and Twitter, and subscribe to the YouTube channel. All right, guys, I hope this helped. Take care.